Hey everybody, you're probably wondering what's going on with the housing market, and you'd be right because you're going to hear different conflicting results. Some people are saying that the market is stalled. Some people are saying that it's starting to pick up. Some people think that there's going to be a crash. The reality of it is, unless you look at the data, mostly it's just speculation. So what I did was I took the liberty of actually pulling data from the San Diego Association of Realtors here, and these are actual data according to the MLS that realtors month to month sell year over year. So the first point that most people are going to probably wonder is, what's the median price for a home? The median price home right now, as of August, is $1,055,000 for a detached home. The interesting thing is that in 2023, the median price for a detached home was $1,015,000. And that number holds true for attached units too, and attached units meaning like condominiums, right? And townhouses. They held pretty level between 23 to 24. What you're going to see that's really interesting in this slide is that the peak of the market for detached property was actually back in April of 2024. And since then, the prices have kind of dipped down from like $1,090,000 to about $1,055,000 right now. And so is this trend going to continue going down? Where we will be able to figure this out is if we look at other data. When looking at data points, it'll give us an idea of where the demand is versus the supply. So the next slide that you're going to see is the percent of original list price received. And basically what that means is when the seller puts the property on the market and the buyer offers a price, what's the difference between the list price and the purchase price? Are prices coming down significantly because buyers are actually offering significantly less? Or when we were like in 2021, things were going 106% even above list price. So back in 2023, we were at 100.2% of the list price was what the offer that buyers were submitting. Currently in 2024, that has dropped. So when a seller lists a property for sale, right now they're getting about 98.7% of their list price. So yes, there is a slight dip. Year over year, however, we are pretty close, 99.6 to 99.7. We saw a little bit of a dip from 23 to 24 in August. And so if you look at the data over on this side, from September 2023, we were basically up year to year at 4%. And then as we went through 2024, you'll see that in June of 2024, it reversed. And so the percentage of off price that was being offered by a buyer has actually gone down to like 1.5%, which is a decrease, but it's not a substantial decrease. It's not like, buyers are coming in and offering, 5-6% below what the market or what the seller is asking. So now we actually should look at the days on market until sale, because that'll tell us what the supply versus the demand ratio is. And if you look at the data here, in 2023, the days on market for single-family detached home was about 26 days. For 2024, was about 27 days for the month of August. Now, if you look at year over year, there was a little bit of a decrease, right? From 31 days in 2023 to 29 days in 2024, which kind of makes sense because in 2023, we were at the peak of interest rates mortgage. And since then, the interest rates have actually dropped a little bit, and it's expected that the interest rate will probably drop a little bit more. The next thing we want to take a look at, which I think is important, is how many homes are coming on the market being listed, how many are going into pending, which means that there was a buyer who submitted an offer for that property, and it may or may not have transacted to the point of close, right? And closed sold escrows, sold homes, are the actual data of people that have purchased a home. So let's look at that right now. The number of new listings that came on the market for the month of August was 1,938. Year over year, we're looking at about 15,134 for 2024, a slight increase in the number of sellers putting their home on the market relative to 2023, as you can see in the graph. The next slide here is the pending sales. And again, for the month of August, we were at 1,360 homes for sale that went into pending status, up from 2023. But if you look at the year over year, it actually is pretty close. So the number of pending sales year over year is very similar to 2023. So could that be a cooling off? Not sure. Now, if you look at the last slide, which is the closed sale, the ratio of 2023 to 2024 is almost dead on. However, if you look at the specific months from September to December of 2023, we saw a significant decrease year over year from the year previous. If you look at June of 2024, July of 2024, right? And now we're into August of 2024 in this slide, it's pretty level. So what does that mean? Well, in 2023, we had the high interest rate. 2024, we had a little bit of a cooling off. Even though interest rates are lower, we're still seeing kind of the same activity as we saw in 2023, which would not necessarily make much sense if interest rates have dropped. And I think this has to do with concerns of people just being nervous about what's going on with the election, whether or not the Feds will reduce interest rates. I think a lot of people are kind of on the fence right now. And a lot of the sellers are worried that if they put their home on the market, and many of them have been locked in at the 3% interest rates, they don't want to run into a situation where they sell and then now they're being forced to go into a new home at, 6% interest. What we're seeing though is interest rates are moving down. Right now, interest rates on a 30-year fixed conventional is right around 6.1 today. Now, what's the expectation? The expectation is I think that in the next few months, even onto early next year, interest rates will drop again. And we could potentially see interest rates down to about maybe the mid fives. And so 5.5, 5.6. At that point, would it drive more demand? It's theoretically possible because we're looking at an interest rate that went from about 6.5 to 5.5. And that 1% delta from an interest rate perspective is pretty substantial. I mean, it could be several $100s a month for most homeowners. And that's incentive enough for them to maybe jump back into the market. Whether or not sellers will jump into and put their home on the market, that still remains to be determined. I think interest rates will have to drop a little bit more for that to happen. And because of that, I think right now, the market prices will not necessarily have a correction, even though there is, less of a demand because of the higher interest rate. The problem is it's kind of artificially keeping prices high because sellers are not moving and they're not selling their property. And so as a result, inventory is just low. And I think the weird balance of sellers not being able to sell because they don't want to lose their 3% interest versus buyers saying, well, the interest rate is right now too high. Now, granted, in other parts of the country, we may not see the same situation because their price point is lower. Here in San Diego, to buy a median price home at $1 million, that 1% delta can be pretty substantial for most people. So if you're not really clear on what's going on with the market, reach out to me and I'll be happy to kind of walk you through the more detail. And then the other thing is, if you like this video and you found it informative, click the like and the subscribe button and I'll be happy to produce more content like this for you to give you the actual facts of what's going on and not some made up information that people aren't necessarily relying or giving you because the data is not there and they're just making it up.